Good afternoon, everyone. Myself, Anjali Nair, on behalf of Kirin Advisors. It's a pleasure to welcome you all to the Beyond the Numbers Value Discovery Summit 2025, powered by Value Educator, co-powered by Kirin Advisors. Today marks day two of our three-day summit with a series of focused management meetings lined up. This is the seventh interaction of the day with Captain Polyplast Limited. From the management side, we are pleased to have Mr. Ritesh Kicharia, the whole-time director. Welcome, sir. Good afternoon.
Good afternoon, and I thank you for inviting me on the show.
From the Value Educator team, we have with us Mr. Praneeth. With that, now I hand over the floor to Mr. Praneeth. Over to you.
Thank you so much, ma'am. Good afternoon, everyone. Thank you for joining us. A quick introduction before we begin. Captain Polyplast Incorporated in 1997 is a leading player in micro irrigation with more than 27 years of experience in drip and sprinkler systems built using German and Israeli technology. The company has a strong presence across 16 states with over 750 dealers and also exports to Africa, Latin America, and the Middle East. It actively participates in government programs like PMKSY and Per Drop More Crop. Beyond irrigation, Captain Polyplast is expanding into solar EPC, offering turnkey rooftop, industrial, utility scale system, and solar water pumps. This vertical is scaling fast and is expected to become a meaningful revenue contributor, supported by schemes like PM Surya Ghar and PM Kusum Yojana. The company also operates a polymer marketing division as an authorized IOCL channel partner in Gujarat, supplying polymer resins to local manufacturers. With this, I conclude the company overview and I now hand over the stage to Mr. Ritesh. Over to you, sir.
Yes, thank you, Pranit. You have already given a very good overview, but still, I'll provide a brief overview. I'll discuss our journey so far, the business segments that we operate in, and the plan for our future. So, at Captain Polyplast Limited, our journey over the last 27 years has been guided by a clear purpose. It is to deliver dependable and sustainable solutions for Indian agriculture. Since our incorporation in 1997, we have remained focused on supporting farmers with promoting efficient water management solutions. The core of our business lies in micro irrigation segment, where we manufacture drip and sprinkler irrigation systems which help farmers optimize water usage and enhance their productivity. We operate three manufacturing facilities, one at Rajkot in Gujarat, another one at Kurnool in Andhra Pradesh, and the newest facility, which will come up shortly, is at Ahmedabad in Gujarat. All of our plants are equipped with state-of-the-art Israeli and US technology for production of micro irrigation products like drip lines. For sales and marketing, we have a robust marketing network in the across 16 states in India with a network of 750 plus dealers. In addition to the domestic market, we also export products to countries in Africa, Latin America, and the Middle East. So this micro irrigation segment is the core of our business and contributes around 90% of the total business. Now, over the years, we have also strategically diversified our operations. In addition to the micro irrigation segment, we have built a presence in the fast growing solar EPC segment as well, so that we can capture the opportunities from the rising adoption of renewable energy solutions, especially in the agriculture segment. In the solar EPC segment, we primarily focus on two areas. One is the solar power projects, where we target residential and commercial customers to set up rooftop solar projects. And the second vertical is solar water pumps business. So for the rooftop business, we are mainly focused on residential segment, where the typical project size is from 3 kilowatt to 10 kilowatt sizes. For the rooftop segment, majority of our business right now comes from the PM Surya Ghar Yojana, where we are already empaneled as a vendor on the national portal. And we are having presence for the rooftop segment across various states, including Gujarat, Maharashtra, MP, UP, Haryana, and Himachal Pradesh. Now, in addition to the rooftop segment, from this year onwards, we have also started scaling up our presence in the solar water pumps business. We have already got empanelment under PM Kusum project in two states, that is Maharashtra and Gujarat. From Maharashtra, we have already received the orders. The first order being for 200 solar pumps, which was valued around 6 crores. And following the execution of that order, we have received another order for 300 solar pumps with a value of around 8 crores. So, from this initial order wins, and also the execution that we have done so far, we are very confident that we will be able to grow the solar water pumps business as well significantly over the coming quarters. Looking ahead, we see clear tailwinds and opportunities in both of our segments. On the policy side, the government of India continues to promote the adoption of micro irrigation systems with a target of covering 10 lakh hectares in 5 years under per drop, more crop initiative. In the solar segment, there is clear support for farmers under PM Kusum, and for residential customers also, there is very strong support under the PM Surya Ghar Yojana. In addition to the policy support, recently there has been a reduction in the GST rate from 12% to 5% on both the micro irrigation products as well as majority of solar products, which augurs well for the demand in both the segments. So we are very well placed to capture the opportunities available in both these segments with our established presence across major agricultural states. We are very confident that we will be able to leverage these reforms and strengthen our role in sustainable agriculture and clean energy. So that is from my side. Now we can move to the question and answer interactions.
Thank you, sir. So participants, the floor is now open for Q&A. Kindly raise your hand or you can drop your questions in the chat box. So we have one question in the chat box. Given the lower margin nature of rooftop solar, how does management decide which projects to accept versus walk away from?
Right. When you say that the rooftop solar segment is a lower margin business, there are multiple segments within the rooftop solar segment as well. So the majority of our business comes from the residential rooftop segment. So in that segment, obviously the market is competitive, but there are two areas. One, if you see the metro and tier one market, there is a very competitive market with a large number of quality vendors available. Whereas we typically target tier two, tier three, and tier four, where we already have an existing network for micro irrigation. So in these markets, the competition is relatively less because there are less number of providers who are providing quality services. So one, we are differentiating our services in that sense, so that we are able to get slightly better margins. And generally, on the residential side, the margin are better than the commercial side. So that is how we are operating, and that is how we ensure that we are able to generate a decent margin even in the face of competition which is there in the rooftop segment.
Thank you, sir. Sir, next question is asking dependence on government policies.
So I'll discuss for both the micro irrigation and solar EPC market. For micro irrigation market, for the entire industry, almost you can say that 85 to 90% of business is ultimately driven by government policies. The per drop more crop initiative is sponsored by central government. That is the cornerstone for the entire industry. And in any of the market, this is the trend that in any of the states we do business for micro irrigation. Bulk of the business comes from the subsidy only. On the solar EPC market as well, the segments which we are targeting, rooftop solar and the water pumps business. Both are also ultimately being driven by the policies of the central government. So there is dependence on the government policies, but if we look at the policies which are there for all the three markets, which is micro irrigation or rooftop solar or solar pumps, there is very strong focus from the central government to continue supporting these initiatives.
Thank you, sir. So we have next question from Ms. Swara. She's asking beyond empanelment, what differentiates Captain's solar pumps versus other approved players when bidding for large state tenders?
Right. So, for the solar water pump, it is a combination of both. One is the product side, offering the solar water pump, and also the other part is the service. So you have to provide the water pump to the farmer, in a quick and timely fashion, and also you have to provide, technical service and support to the farmer for 5 years. So because we have a very strong network in micro irrigation, we are able to generate demand from the farmers because of our existing setup, and also we are able to provide the service to the farmers in a timely manner. On the product side, since we are a EPC player, we have a dependency on the vendors. We have already partnered with very good vendors for water pumps, for the solar DC pumps. We have already got our designs tested and registered under MNRE as well. And from the initial feedback which we have got from Maharashtra, where we have already supplied significant number of pumps, we have got a very good feedback from the farmers, both on the product side and the service side.
Thank you, sir. So we have next question from Mr. Murli. Yes, Mr. Murli, you can go ahead and ask your question.
Yeah. Hi, Ritishji, and that's a beautiful presentation. Thank you. I have a question about the top line and bottom line. The first thing is about the top line. For the past 5 years financials, if we take, the growth is actually 3x in the last 10 years. Are you expecting the same for the next 10 years or any different projections you have for the next 10 years?
Right. So we are expecting a much better growth compared to that. If we talk about the last 10 years, the growth has come only from one segment, which was micro irrigation segment. Now we are having dependence on two different verticals. So how we are looking at this over next 3 years is that the core micro irrigation business, we are targeting growth of around 25% CAGR over next 3 years. And on the solar EPC segment, we are expecting a much faster growth. Right now, it is at a 10% contribution of the overall business. So that we are targeting that it would reach at least 50% of the overall business in next 3 years.
What is the other one you said? You said three, right? One is the micro irrigation, second is the solar.
So on
You
the
said
solar
third
EPC, there are two segments. One is the water pumps, and the other is rooftop segment.
Okay, but this rooftop segment is quite competitive, right? It's like a very narrow margins in the solar EPCs. I'm seeing heavy competition, like, in each city there are over 1,000 companies, like local, global, regional, or even pan India.
Right. No, definitely.
How do
So,
you survive?
in the previous remarks also I mentioned that if we talk about any tier one or metro cities, on an average you will have at least 200 to 300 vendors. Right. If you look at top cities in all states, if you see Ahmedabad in Maharashtra, if you see Mumbai, Pune in MP, if you see Indore, right, these kind of markets they'll always have at least 200, 300 vendors. But if we talk about Gujarat, in Gujarat, we have already executed 20,000 kilowatts. So almost you can say 7,000 houses in last 2 years since PM Surya Ghar started. And majority of our business has been from tier 2, tier 3, and tier 4. So what happens is there the number of vendors which you see almost 200, 300 in the bigger cities, that will drop down to around 50 in those markets. And also out of those 50, there will be few vendors only who will have experience of operating for more than 5, 10 years at least and being present in that market. So there you will get that trust factor easily from the consumer side compared to other vendors. So that is how we are seeing this segment. And
So,
also, a majority of our micro irrigation presence is in those markets. So some of the dealers who are dealing with micro irrigation, they also start promoting these same products for us.
so in the solar area, again, coming back to what is the composition of like, the residential, industrial, and then institutional or, office areas?
The 90% of our rooftop business is from the residential segment.
So that means actually the scalability is too tough, right? It's like, because the ticket size is very small if it is residential.
But on the other side, if you see, the opportunity size is also very big. Right now, if you see adoption of rooftop segment, there are only 2 or 3 states which have seen very good adoption. If we see states like Gujarat, Maharashtra, there has been very decent penetration. Whereas most of the other states, the penetration level is still very low. Right? If we see MP, UP, states like Andhra, which are very large states, large number of consumers, and still the penetration is very low. So the opportunity size is also very large in this segment. And even if you get a very small market share in that, the overall opportunity, in absolute numbers would be quite sizable.
Okay, so how are you actually, planning to increase your capex for the ambitious growth of, you are saying more than 3x means that will be about like, 1,000 plus crores of, revenue growth you are expecting in the next 10 years, right? So what is your capex plan for that then?
Right. So, for the micro irrigation business, that is a segment where we manufacture our own products. We already have 2 facilities. Third, we have already undertaken capex since last 1 year at Ahmedabad. So that facility is also expected to come up shortly. So once that plant is set up for the micro irrigation segment alone, we can comfortably achieve a top line of 400 crores. On the solar EPC side, right now, we do not have any plans for capex. We'll operate as a EPC player only, and our focus would be on growing and growing the scale of the business rather than on building manufacturing for those products.
Great, thank you. I'm just going to end with the next question that I was asking for the bottom line. So if you see again, the top line was actually 3x growth from the last 10 years, but the bottom line, if I see, it is almost 15x. Are you expecting the, similar 15x growth for the next 10 years?
Uh, See, over the next 3 years, 5 years, or 10 years, obviously, uh, we do see margin expansion as well. But the overall margin composition will also depend on the mix of the business. As long as majority of the business stays in micro irrigation and solar water pumps, the margins that we are doing right now, they would be sustainable. So the profit growth would also be similar to the growth in top line. But if you are making a comparison with the last 10 years, then obviously that same kind of scenario would not replicate.
So it will be on the higher side or the lower side, you're saying?
No, it would be at par with the growth in top line.
Okay, thanks. Yeah, thank you very much.
Thank you, sir. So we have some questions in the chat box. We have question from someone named DB. He's asking, his first question is the profitability puzzle, gross to net. Your Q2 FY26 revenue grew nearly 50% year on year. but your net profit PAT declined by over 74%. This indicates a severe contraction in margin. So his question is, can you provide a detailed quantitative breakdown of the 74.5% PAT decline? Specifically, what was the exact negative impact in rupees crore in Q2 FY26?
Right. If we look at Q2 FY25, we had a one-time exceptional gain of around 15 crores. If we compare Q2 FY26 and FY25 without the effect of that exceptional gain, then it would be a more meaningful comparison. And also, if you look at the operating margins are almost similar for both the quarters. So the major difference which has been there on the PAT side, it is because of the exceptional gain.
Yes, sir. So continuation to that question, raw material price volatility and strategy to mitigate future risk.
In the micro irrigation segment, the majority of our raw materials are polymers, which are HDP, LLDP granules, and PVC resin. So, because majority of our business is linked with the government subsidy, the central government has made a clear guideline for determining the prices. So all the prices are linked with material and manpower wage index. So almost 70% of the price index is determined from wholesale price index for polymers, and the remaining 30% is determined by wage index and also fuel and other material cost index. So whenever there is a change in that index by more than 5%, the prices are revised by the government. So with a lag of few months, whatever effect is there in the raw material cost and also on the wage cost, that is ultimately given effect in the product prices for micro irrigation. And for the solar EPC segment, obviously for the rooftop segment, we can immediately pass on the effect of raw material cost to the customers, whether on the plus or the downward side. And again, on the solar water pump side, there the margins, the prices are fixed by the government. And whenever there is a change, there is a clause that beyond a certain change in cost, there will be a price effect given by the competent authority. So there also there is somewhat delay in passing on the effect of cost.
Thank you, sir. The next question is competitive pricing or sales mix shift. Example, higher low margin solar EPC versus high margin MIS products.
Sorry, I did not understand the question.
Continuation to that question only. Competitive pricing or sales mix shift. Example, higher low margin solar EPC versus high margin MIS products.
So I've already discussed, how we are looking at growth for both the segments. When we say that solar EPC segment is a lower margin segment, there are two segments within that. The rooftop segment obviously is comparatively lower margin because of the competition. But if you look at the solar pumps business from PM Kusum, again, there the margins are higher because there it is a different type of market, and there the margins are similar to micro irrigation products.
And operating expenses spike, example, higher advertisement, employee cost, or new plant setup cost.
So as I already said that on the capex side, I don't understand in what sense that operating expense spike is being asked. But on the capex side, I've already discussed that capex will be there only for the Ahmedabad plant. Apart from that, for the upcoming growth, there would be no capex.
Thank you, sir. His second question is regarding working capital and cash conversion cycle, the subsidy trap. So your business operates with very high debtor days, characteristic of a subsidy-driven model. The entire value chain gets stretched due to slow government subsidy disbursements. So his question is, with debtor days historically about 200 days and likely higher with the solar EPC segment. Your net working capital is ballooning. You raised funds via warrants. What is the specific quantifiable planned target debtor days and inventory days for FY27 to reduce the cash conversion cycle and release capital?
So if we look at the debtor days, uh, because the market in which we are operating, whether it is micro irrigation or even the solar pump segment, uh, as an industry, when the model is dependent on subsidy, there will be a minimum number of days to complete your receivable cycle. So we cannot say that right now when we are operating at a debtor days cycle of 200 days, we can meaningfully bring it down to say 120 days over next 30 no, 3 to 4 years. That is not possible because that is the nature of the market. But what we try to ensure from our end is that whatever process is there after supplying the material which is required to encash the subsidy, we try to do that as fast as possible from our end. And also there is other side which is ensuring as an industry that we liaise with the government to disburse the funds in a fast and transparent manner. So those are the two areas where we can focus on. And over the years, there will be improvement in debtor days because of that. It will bring down from the current levels. There will be an improvement of say 10-15% because of these steps. But apart from that, because of the margins which are there in the segment, as no, as the situation stands today, also the although the working capital cycle gets stressed, but because of the margins, we are able to sustain this kind of business model.
Thank you, sir. So, what proportion of your solar EPC revenue is immediately cash paying, non-subsidy versus private versus government-backed PM, Kusum, etc., and what is the typical actual realization time for each?
So the solar pumps business we have started from this year only. The last year, whatever business we did, it was from the rooftop segment alone, and that is 100% upfront payment business. So there is no receivable days. In the solar pump segment, we are expecting the working capital cycle to be of around 3 to 4 months.
Thank you, sir. So next question is, what is the incremental ROC, return on capital employed, target for the capital invested, especially in the Ahmedabad plant, and how will it improve the blended company ROC?
Right. So, as we grow ahead, most of our investment which would be there, it would be on the working capital side. So, naturally, because of that, the return on capital would also be better, as majority of our growth will also come from the EPC business. And we are seeing that because of that, there would be an improvement in the overall ROCs and ROC as well, along with the top line.
Thank you, sir. So the next question is, while the Ahmedabad accessories plant is expected to improve margins, what execution or ramp-up risk should investors watch in the first year?
Uh, at the Ahmedabad plant, in the first phase, whatever capacity we are adding, that would be for captive consumption only. So there is very little risk in ramping up production at that facility. Only in the second phase, we would be targeting capacity for generating external sales. So whatever products will be manufactured, it would be for consumption of micro irrigation systems only, which we are already outsourcing from other vendors. And because of that, we would be seeing an improvement in the overall margin for the micro irrigation segment.
Thank you, sir. So next question is from Mr. Parth. He's asking, working capital intensity remains a key concern in the logistics sector. What concrete steps are being taken to reduce receivable days and improve cash conversion? And what is a realistic steady state working capital cycle you are targeting?
I don't know about the logistics sector, but I think in previous answer I've already discussed what are the steps which we are taking for improving the working capital cycle, and we are expecting that it should move on the same lines.
Thank you, sir. So next question is, if the solar EPC segment revenue were to double, what would be the blended normalized EBITDA margin for the entire company, and how would this impact your overall capital intensity and working capital requirement?
Overall margins would be in the 11 to 12 percentage range, and working capital on a blended basis would be should be lower because both the rooftop segment and the solar pumps segment has slightly a lower working capital intensity compared to the micro irrigation segment.
Thank you, sir. Do you have a strict internal hurdle rate for entering new EPC contracts to ensure the solar business remains accretive to the overall ROC, not just the top line?
No, I've already discussed that. We look at the margins on the rooftop segment because there is very nil working capital required. Even at a lower margin, the ROC is very lucrative. And on the solar pumps business, as I've already mentioned, that the margins are comparable to the micro irrigation segment. So there also already that itself ensures that there is a decent internal rate of return. But apart from that, we don't participate in large solar EPC ground-mounted contracts or things like that where we need to evaluate IRRs.
Thank you, sir. So next question is our revenue breakup.
I've already mentioned that in FY25, the micro irrigation contributed 90% to the overall revenue, and 10% was from the solar EPC segment.
Thank you, sir. So next question is from Mr. Parth. He's asking, considering the dependence on government-linked schemes, how does the company manage risk around subsidy delays or policy changes?
So that comes from our experience in this industry. We are already there in this industry since 27 years, working across all the states for quite no, considerable number of years. So we know what kind of policy is there and what, even if there are any changes, we know in advance how we would be able to manage that. And obviously, when we are able to manage that, we decide to operate in that particular market, whether it is for micro irrigation or for the solar pumps business as well.
Thank you, sir. So next question is, could the management please clarify the specific purpose of the increase in promoter pledging observed recently, and what is the current quantum of shares pledged in percentage of promoter holding, and what is the definitive timeline or plan for its full release?
I think we need to check the data. There has been no recent increase in pledging. This pledge was already there since last 5-6 years. There has been no increase in pledge. Maybe after the call we can discuss the exact question which he has.
Okay, sir. Thank you. So next question is working capital issues with government. We had seen working capital issues with the biggest player in the market in irrigation segment.
Right. So in the micro irrigation segment, there are two kinds of models. One is cluster model where you take a very large project from the government which covers a very large area, say 10-15 villages, and you provide micro irrigation to all the farmers in that area. So those kind of projects we do not participate in because there is very high risk of execution in that, And whatever problems you are alluding for largest player in the industry, it has been primarily because of participating in those kind of projects. Where we operate in is individual farmer. So whatever micro irrigation systems we supply, we design individual system for each and every farmer. And after acceptance from the farmer side and from the government side only, we provide the system to the farmer. So in that case, there is negligible risk related to recovery of subsidy, because there is confirmation from both the farmer side and also from the government side for each and every the system which we are supplying.
Thank you, sir. So next question is from Mr. Mohammed Murtaza. His question is on micro irrigation vertical and the company's medium to long-term vision. As we look ahead to the next 3 to 5 years, could you please walk us through management's strategic roadmap for this segment?
Right. So as I've already mentioned that we are targeting 25% CAGR for micro irrigation segment. Uh, how we are targeting that is on the basis of the growth for the overall market, and also on the basis of our plan to capture market share. We are already having presence in 16 states. The government of India is also actively pursuing to increase the penetration of micro irrigation. So overall market also we are expecting it will grow between 15 to 20% over this period. And because of our strong presence in these states, we are very confident that we will be able to grow the market share as well. And consequently, we are targeting a 25% growth rate.
Continuation to that, sir, we understand that the company has set a target of achieving around 25% CAGR, and it would be helpful to understand how this is being underpinned operationally, and we are planning to grow in this vertical.
I've already answered that. So it would be a mix of both market growth and also increasing our share in each of the states that we operate in.
Sir, his second question is specifically, could you share some color on the R&D and innovation initiatives underway in micro irrigation, whether in product design, efficiency, or technology integration?
Right. So if we talk about micro irrigation system, the heart of the system is drip line. So for manufacturing of drip line, we already have the latest technology available globally. So the product which we are offering to the farmers right now, we can say that that product is one of the best products available globally. Apart from this, we are also introducing products for automation of existing irrigation systems, whether it is time-based or volume-based irrigation solutions for the farmers. So that is the current product segment where we are developing the products, and we have already done select trials at the farmers field for that. So that is how we are ensuring that going ahead also we will stay not technologically also will have an edge in terms of the product which we are offering.
Thank you, sir. Additionally, how does the company plan to scale this vertical geographically? Are there specific states or regions being prioritized for deeper penetration?
So the states where we are already operating, that covers almost 90% of the 95% of the micro irrigation market in India. So in most of these states, still the penetration is considerably low, and from the existing markets only, we are expecting that as penetration improves, we will also have a good opportunity in the existing states itself. In terms of expansion geographically, we don't see that there would be a very meaningful expansion. Whatever expansion will happen for the micro irrigation, it would happen in the existing markets itself.
Thank you, sir. So last question from Mr. Mohammed. He's asking overall a bit of insight into the long-term vision and growth levers for this vertical would be very helpful.
I think I have already discussed that.
Okay, sir, we'll move on to next question. So next question is, there is money being distributed by state and the center under the schemes, and when there is disbursement issue from any one end, the subsidy gets delayed. How do you look at it?
So, as I already said, that one part of it comes from the experience of being in this market. We know what kind of payment cycles are there in each of the states, and also what kind of disbursement is there from the central and state government. Since last year, the central government has implemented PFMS system, where they are for each and every scheme, they have to open a account with the state treasury in RBI state branch. So in such a scenario, even whatever funds are disbursed by the central government, they cannot be used by the state government for other schemes. So for any state, if say central government releases 100 crores for micro irrigation, it can be used only for that purpose. So because of this, there is very little chance that there will be no delays in disbursement or no diversion of funds by the state government for other purposes. And if we look at the overall size as well, uh, for the entire micro irrigation segment, if we see contribution from both state and central government, it would be a very small no expenditure for state or central government compared to their overall budget. In any state, their maximum expense for subsidy would be in the range of 500 to 1000 crores only. So that is a very small amount compared to their overall budget. And generally, because this is a farmer related program, they are able to disburse funds on a timely basis.
Okay, sir, thank you. So we have one last question in the chat box. With solar EPC targeted to reach 50% of revenues over time, how does management ensure that overall return ratios remain comparable to the core MIS business?
Uh, as I said, that if we see the rooftop segment, although the margin is lower, but correspondingly the working capital investment is also lower. So the return on investment would be very good. And for the solar pumps business also, the margins are comparable to micro irrigation segment. So on a blended basis, the solar EPC business would also yield a similar kind of return on investment like the micro irrigation segment.
Thank you, sir. Participants, if you have any questions, you can raise your hand or you can drop your questions in the chat box. Sir, I think we have covered most of the questions. So if there are no further questions, can we conclude the meeting?
Yes, sure.
So thank you, sir. Thank you, everyone, for your time and participation. If there are any further more questions, you can reach out to us at corporateaccess@kirinadvisors.com.
Thank you.
Thank you, sir.
Thank you so much.